How's your trading, Sam?
Yeah, now I've got stage fright, performance anxiety. Yeah, trading. So something that I have been learning about or gaining, thinking that I'm making a step forward is something specifically about the reversal types when you've got absorption reversals or exhaustion reverse. I don't know if you kind of differentiate between the two.
If you say that again, exhaustion and what?
Absorption.
Oh, okay.
I think you're frozen.
Have I? Yeah, can you hear me
Oh yeah,
now?
yeah, you're back.
Oh,
And I think because it's something I used to fuck up because my main setup is an exhaustion setup. Uh, when the market structure breaks, then we retrace up, and there's just no more buyers left, and then it dumps. But a few times in the past, it's confused me. I've misunderstood the situation. It's been absorption. The reversals, the structure break, and everything's still valid, and there isn't that much volume, so everything's still good. But it just keeps going up to the buyers are still there. There's just still loads of buyers, and it just really confuses me, and I panic out of it. But I've started to think this is just a different scenario. It's where there's high liquidity in the book, and there's people. I believe it happens where there's trapped traders that just want to get out of their position. So where the market's pulling, the market say comes down, then pulls back up, and it's just loads of orders sat there just wanting to get out. So and they're taking advantage of the current momentum of the market. It's pushing into it, but it's just taking all the buyers out with the sell. I think that's what's happening. It's not like there's just lack of buyers and it just rolls over. That's exhaustion. There's just no one left to buy. It's just this heavy buying smacking into the liquidity until it kind of peters out. What's that banging? You got a building site.
um, no, that's just my brain trying to work out what the fuck I'm saying.
You need to get that
What?
seen to, I think.
I thought you didn't look into the why of things. You observe it, you
I
track it, and
I'm not. Well, yeah, I am looking into the why. Yeah, I think maybe I've changed my view a little bit on that. I heard a chat with traders podcast where there's a guy, a quant, that actually generates setups starting from the why, not even about anything to do with structure or anything, just what might be happening in real life, and then and he says it's really important that you understand the why. I mean, this is some people don't think it is. I'm not sure. Still not sure it's completely important.
I do. I agree with that, and I've heard that before. That I've heard a lot of these quantitative hedge funds. They don't do massive data mines. They're not looking at trends across decade. They sit down with a group of traders to say what could be some reasons for movements. Like,
Mm.
okay, stops getting hit, people trying to trap traders, blah blah, and then they
Yeah.
test like a handful of models on those things and try to find evidence. I think that because otherwise, I mean, if you just dropped into the world of trading, it's like what the fuck? There's millions of. It's better to start with some framework, some
Yeah.
belief, and then work around that. I think.
Yeah. I
But
mean,
obviously,
well,
you can go
yeah.
too far and get.
I mean, I'm starting to see the benefit of that. And simultaneously, I've also watched an Axia Futures video where they specifically talked about, I think I mentioned this before, the two different types of reversals: exhaustion reversals and absorption reversals. And yeah, to the naked eye, and if you haven't got a lot of experience, they look very similar. But there's subtleties about them, and I think I'm picking up on that. And then if you think about the whys, because the whys help you know what scenarios, what's going to happen, which one might be likely to happen. Like if the market's just been rallying, 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 and there's not really any structure or anything of significance, you're probably going to get exhaustion. You're just going to slowly, eventually run out of momentum. But if the market has been aggressively dumping, say, and it just dumps through a level where many people might have been trying to buy, as it retests that level, that's an absorption reversal because that's the traps traders basically. It's coming back into the zone where lots of people became offside. So it's interesting to think about the two different. And I think I've got some rules now that identify the two. And basically, I just stay on the higher time frame because the higher time frame was good. It was the situation in Bitcoin just recently. It started rallying up to 27s again, 28s. And I because I've been short, from 29, 30, and then I got stopped out, and I was thinking, what's going on here? But if you zoom out to the daily or even the 2-day or 3-day time frames, it's still back testing a major level that was broken previously, and that's where I think there's absorption taking place now. There's trap traders getting out. But once all the trap traders got out, it couldn't break up there because they was getting out. The absorption was taking place, and now it's starting to roll over again and come down again. But on the lower time frame, it just looked like shitloads of momentum, and it wasn't really doing what I thought it would be doing for exhaustion, which is my main thing I look at. But just keep zoomed out on the 2-day, it looks good. So yeah, that's something I've been learning.
So I still want to understand about your journaling process. How much data are you really analyzing? Like you said all this stuff about the different absorption and exhaustion. Are you keeping it really simple and just like, okay, that was an absorption, that was exhaustion? Or are you tracking like time of day or how far you went and how big your drawdown is? Like how much are you tracking? Because I've recently just deleted a bunch of cells from my journal because it's just too much. I added them in not that long ago anyway, because I thought, okay, I don't even know what I'm looking for, but if I get more data, then I'm going to get more information, but it's just too much. So I'm trying to drill it back down and keep it more simple. So how do you handle it?
Well, just before I go into it, I heard on Chat with Traders. I listened to it in the gym. It's an amazing resource, by the way. I'm just going through every single one and just listening to it. And I'm digressing here. Sometimes you kind of hear the first 5 minutes and you think this guy's a fucking idiot. But I've learned you can always get something out of every one. Never just skip it because there's always something that you learn. And there was a guy talking about journaling in that, which resonated with me, and he said something which I kind of agree with. Is about keep going back to it, consistency, and it's important not to track randomness, because if you start tracking randomness, your stats are meaningless. So yeah, you've got to only track when you're actually doing your setup. But that doesn't answer your question, which is about how the detail of tracking. For example, if you
sorry, actually, that's a good point. How do you know what's random and what's not?
But when I say random, I mean if it's just kind of an impulsive discretionary trade that you feel like taking, it's not really your setup. It depends what kind of trader you are as well. But it becomes harder to journal, I think, if you're 100% discretionary, because you've got so many different reasons for doing so many different things. Yeah. It's better just to have one system at first, and say this is my setup, and this is why I traded it, and it was playing out. And so what I track, I have my basically break of structure and retest reversal, exhaustion reversals, which now I've learned could be absorption reversals as well, and they happen across all time frames. So I mark the time frame. If it's a 15-minute reversal, I mark 15 minutes. If it's a 4-hour, I mark 4 hours. I trade across all time frames. This is another side note, but I think it's stupid to just say I trade the hourly and the 5-minute, because you're shaping the market around your agenda. The market does what it wants to do. It's continuous data, isn't it? I think we talked about this before. Why pigeonhole it into what you want to trade? Sometimes the 1 hour isn't relevant. It's the 2 hour, in my opinion, because it's the 2 hour structure that holds. But anyway, so I define the time frame that the pattern, the setup is playing out on. That's the first thing I do. I also track 3 things, my kind of psychological things. My my patience, my execution, and my analysis. Basically, how I do those 3 things. Just a score out of 10. That's just like how how my analysis was. So, kind of the plan, the setup. Did it actually do what I thought it would do when I entered the trade? And that's normally the best. That's normally like I've got 10s, 9s, and 10s across the board. The execution is where I struggle, but this is the great thing in tracking. One of the things I've learned is not always, but usually I'm right ahead of time. So just stick to your plan, stick to your setup. And I've started adding another one that I track as well, which is sizing. And I give myself a 10 out of 10 if I'm doing the correct size that I should be doing. I give myself a 1 out of 10 if I'm just being a pussy and not sizing up. My monthly goal is to size up a bit more. And it's a natural tendency to want to keep sizing down. I'm not sure about this. I'm going to size down a little bit. And then I give myself a 1 because, the trade is beautiful, but I make $10. Whatever. It sucks. So, yeah. So then at the end of the month, I can see how I've been performing just on a broad scale in my sizing, my execution, and my analysis, planning. So I track the time frame and it's the same setup every time. I track what the setup does. I think I shared that with you before. Well, that's the IBI Rob, IBI Rib. Like if it hits the blue first, then the red, and then breaks the red. So, but that's not so important. That's because after the fact, and you never know what it's going to do. That's just kind of the way it plays out. Yeah. And then I track positives and negatives and lessons. So what did I do really well in this trade? What did I do really badly in this trade? And what can I do next time to stop the bad things happening again? And it could just be a case of you didn't size up, so next time just size up. Or be patient on a higher. And I'm one of the biggest problems that I'm currently facing is playing these on higher time frames. Like if it's a 2-hour or 4-hour structure break, it's just such a bigger consolidation area, so there's more volatility involved. So I have to size appropriately, and I tend to get shaken out more, but it still doesn't hit my stop. It still doesn't get invalidated, but the invalidation is miles away. So then that's where sizing comes into it, and you have to kind of adjust your size depending on the volatility. But yeah, and just the tracking and the journaling, I look back at it and I can see, the last 3 times I've played a 4-hour reversal or whatever, I got shaken out, and it didn't invalidate, and it would have played out perfectly. So that's telling me just to be a bit more patient with the bigger time frames. So yeah, that's kind of my journaling.
Yeah, journaling's always been a weak point of mine. I think I don't know how to do it properly. In the beginning, it was super simple, but then it was almost pointless. Like, okay, date, entry price, stop loss price, risk reward. But then that's just I can get that in my statement. Like, well, I said the risk reward, I guess, but it doesn't really tell me anything. So then I'm like tracking like, okay, what was the max paper profit? What was the max drawdown? How long was the trade, open for? And that, but now I've got it really complicated. Now I'm like, okay, what was the volatility? What was the what was the next big event? How far away was the event? What's the sentiment indicator? It's like too much shit, obviously. At some point, I was like, I know it's too much. I don't know, but maybe eventually I'll see a pattern. But then I realized it's just way too much, and it's actually sometimes I don't fill in the journal because I just can't. It's just too much shit to fill in.
Yeah.
So then I'm skipping, and then I forget my emotional state, so I can't fill in the journal completely. So if it's simple, it's more you can handle it better.
For sure, you got to keep it simple. I think otherwise you don't do it. There's something else I do as well. Obviously, is record all the trades and put a link to the recording. That if I ever want to look back at it, but that doesn't obviously encapsulate the main points at a glance. But yeah, I don't know, maybe you got to define your setup better or something. I don't know. Just as you like.
Well, okay. Well, I've got some things to say because I've got a more of a bigger picture point about my trading. So one thing I wanted to say about that, you mentioned randomness in journaling. I misunderstood, but how about randomness in the results? Because I've noticed, and now I've got like the data to prove it, that most of my big winning trades come on a Sunday or a Friday. Like, I mean, I enter them on a Sunday, Friday, and they play out. But not always. Sometimes on a Wednesday, I can also have a trade. But there's something about Sundays and Fridays, and I'm trying to come like, okay, it makes sense in a way because, like, especially on a Sunday, there's low volatility over the weekend, and then it's like exploding out for the week or whatever. I have no idea, but should I actually look into it, or could it just be a random fluctuation? Because I don't even know how to find out if there's something there. And I don't want to only start taking Sunday trades and miss the Wednesdays.
Yeah. You got an aeroplane going now. Just wait for that to Yeah, it depends on your sample size, I guess. If it's like, and it depends on the amount of variance. Like, is your edge much bigger on a Sunday, or is it just slightly more significant? And over how many occurrences? But it, like you say, it does make logical sense if you want to think about the whys, because you're looking at kind of low volatility, low volume breakouts, and it does often do that at the weekend. It goes, the volume drops. It's kind of like Christmas was the same example, but on a yearly scale, isn't it? It's like the Christmas is like the weekend of the year, or whatever, and it just kind of, the volatility and volume dropped, and you got your trade. So it could be, yeah. I mean, if you only trade on Sundays or Fridays, you can work out what your P&L would have been, and then just stick to that if it's much better. Assuming, yeah, like I say, you've got the right amount of data in there.
I couldn't figure it out in terms of Fridays, what's special about Fridays, but then it makes sense because the profit actually comes on, in some cases, like a few years ago when I caught the mini flash crash, it happened on a Saturday, low liquidity. So it makes sense. But on the other hand, it could be there's not that much data necessarily because some of those outsized gains are outliers. Like, that's the point. It's a fat tail. So there's a few trades where they work, but they work really. So it's a significant difference, but there's only a few samples. And obviously, I don't want to then say, okay, I'm only going to trade Friday and Saturday. I'll also miss Wednesdays and Thursdays. But I think this is where the edge comes from, unless it's a sizing thing where you still trade Wednesdays and Thursdays, but that's your, B or C setup, and you trade it small. And then when you get a setup on a Sunday, then you like go all in.
Yeah.
That might be more
Yeah,
logical.
that sounds like a good idea. I mean, I personally, maybe because I'm more of a low short-term trader, I don't really care what day of the week it is. And I don't really like weekends because they're generally less volatile.
Yeah, I don't like weekends either.
But yeah, and I think actually looking at my my results, Monday to Friday, it's all pretty similar across the board. I don't think there's any significant difference depending on the day of the week. And I don't really, if going back to the whys, I don't know why there should be any either. Because, I mean, there is certain news events and things that happen on certain days every month, which is one argument. But
yeah, but also, like, big players rebalance their portfolios at the end of the month. There's hedging flows. There is some logic behind it. I think it's reasonable. And but also it depends on your setup. If you're a micro time frame trader,
exactly.
it doesn't matter. But in my case, it could matter because it's dependent on volume and stuff.
Yeah, well, that's it as well. Like even hour of the day. Like a lot of people, I was rewatching Mark Douglas's webinar. Not webinar, just before webinars existed. What were they called? Seminar.
Storytelling service.
Yeah, no, it was like a seminar, a workshop in front of a live audience. But yeah, he was saying like traders used to go for lunch.
I think that makes sense. I remember I told you I was trying to write rewrite reminiscences of a stock. I don't know why I can't fucking speak. Reminiscences of a stock operator, but from the perspective of a modern crypto trader. And one of the things I put in there was actually a true story from when I was like, when I first got into trading. I met some guy in a forum and we would private message, and he was trading pound dollar, and his style influenced mine a lot, even to this day. But I remember he was long, price went up, then it consolidated, and he said like, yeah, well, probably the traders are going for a coffee or a quick cigarette, and they'll come back to the monitors in 10 minutes, and it continues because the market is made up of people, and people are, they have patterns of behavior.
Yeah. I don't know if I believe that. It might be the case, it might not be the case, but it is speculation because I've never been on a big trading desk. We've got no experience with that. And of course, there's algorithms and there's a lot of automated trading, so it doesn't really make sense that, oh, it's lunchtime now, everyone's out for lunch when the market's 90% algorithms. Algorithms don't eat lunch. But I don't know.
You are the lunch.
Yeah, exactly. But I question it. I don't know. Yeah. I don't know. I'm
Maybe,
not gonna...
but I don't think there's anything wrong with that. Even if it's not true, it actually helps you create a framework for looking at market data. Like, okay, it's not lunch, but it's consolidation. And if in your mind it's easier to see it as traders having lunch, then why not? It's not necessarily bad. It can even be helpful.
Well, as long as it doesn't influence your decisions, like you're making assumptions.
Yeah. It's a good point. So, okay, let me tell you about my trading. Like a few weeks ago, I was on the verge of quitting. Like psychologically, I'm just like, I can't do it. It's been 15 years, more or less. Not necessarily like all the way through. I took a break for a few years. Only in the last few years, I started to see real progress. And then, like beginning of the year, big trade, biggest trade amount, best trade in terms of dollar amount, in terms of risk reward. And I've done it, I saw it coming, blah blah blah. Then I like give a big chunk of it back, and then I have some emotional shit. And so I'm like, okay, at some point it hit me that like right now I'm in a drawdown, I feel bad. When I see a trade in profit, I feel good, which is not a good thing to feel, but it's just the way it goes. But then I realized, okay, I feel bad now. I'm in a drawdown. That's I guess it's human. But then I was even being stupid when I had a big win. Then my size got bigger. I was making stupid trades. I thought I could predict the market. I was trading setups that weren't setups. So maybe I'm just not built for this, because even when I'm doing well and winning, I still fuck up. So, and then I made some amateurish mistakes. Like I'm trying to change my strategy, because I'm looking back at, okay, I wouldn't be in this drawdown if I just took profits at certain levels, specific predefined levels. And then the last week or the week before, I'm like, okay, I'm going to switch to that because I'm just sick of this drawdown. I need to get out of the drawdown. I switch to it. I take a trade. I take profit instead of letting it run. And I'm like, okay, I feel good. But then it keeps running. And then I'm like, fuck, why did I just completely change my strategy in 1 week, So then I got back into the trade later. Luckily, I was, calm enough to wait for the setup to reoccur. And then I added, and then I was in the trade as I would have been, but at a worse average price. And then it ended up at break even anyway, so it's not a big deal. But the fact that then I was swinging, from okay, I took a trade, I got a profit, that's good. Oh shit, the trade's running without me. Then I was like chasing it. Then I got in a big trade, and I was like, I knew I should have stuck to the original trade. Then it hit break even anyway, so it didn't work out in the long term. So swinging from there to there, I'm like, okay, I can't do it. I need to take. Okay, I'm not going to quit because I can't. I'm going to take a break. Right now, my mindset is like this. I told you my idea of like my margin account, where when the setup builds up, I like push all in, but it's not my whole account. It's the margin allocated to a series of trades. If my drawdown continues and I hit that, I'm just gonna quit for like the summer or something. Like take a break, take a breather. So it's either like I work my way out of the drawdown, I hit a trade, or I don't, and I take a breather. Because I feel like my mindset is totally screwed at the moment. I'm way too, like, losses hurt me, paper profits make me feel excited. It's just not good.
Yeah. Well, I don't think you're alone in that though. I think
Right.
feeling bad in drawdown and feeling euphoric in when you hit a winner is just human nature, and we all go through it. We're just human, and this is the challenge of trading. You have to suppress natural human emotions. It's not like you're not made for it. You just have to. We're all not made for it in that respect. You just have to be mindful of that. And
Yeah, it's a good point.
There are things you can do to cope with it. And just something I've again recently discovered this year. For example, if you're in a drawdown and you're feeling a bit shit, it sounds like a cliche. It sounds fucking simple, but go and have a workout, do exercise, do a gym, do other things outside of trading to get those endorphins flowing again. And it really does help. And it also, it's when you start looking at the gym and fitness like this, it just changes. It's a game changer. And again, we think we talked about this before, but when you have the attitude of I want to get a six-pack for summer, or I want to weigh 80 kilos, it's a short-lived goal, and by the time when you hit your goal, it's just you fall off. Your motivation just drops. If you flip it and you think I'm just going to the gym forever because it makes me feel better, it's like a coping mechanism. It's just a part of my life now. It's like a routine. And often when I've been stressed or feeling shit or I've just lost a trade, go and have a really hard workout, and I just walk out of the gym just like a reset. It's just a great stress reliever. So use fitness as like a tool. So this is one example of a way that you can overcome this human fallacy that we have. Fallacy, fallibility.
Fallibility.
Yeah.
Yeah, it's a good point, and it doesn't have to be a workout. It's good, but maybe if you're an older person, you could just go for a walk, for example, just breathe some fresh air, resetting. Yeah, it's a good
the mental
way
health.
of putting it.
So that's the.
So
I mean, that was your first thing that you said about you're not made for it. But the other thing you were talking about was you're changing your strategy. This is like kind of another classic thing that everyone does when something doesn't work. And I go back to my poker days, and I used to do the same then. Like when you're just on a down, like because your trading strategy has a lot of drawdown in it by design or whatever. And it's this. I can relate to that with poker when I'm just go weeks and weeks and just keep losing, and I don't know what's going on, and I start questioning it and Googling like what is normal variance, and maybe I should be doing something different. So that's normal as well. That's perfectly normal. But the only way to get out of that, and I think this is harder for you because you're a swing trader and you have less data available to you. But for me, there's literally 3, 4, 5 setups per day across timeframes that I see my setup. So I learn quicker, and I get my experience builds quicker when I'm scalping and day trading than it does your swing trade. If you're playing a daily chart, obviously that's only 365 bars a year, so you can only learn so much in that time. But yeah, it's maybe consider not changing your strategy, but if you, I don't know, looking at smaller timeframes for opportunities to learn quicker. If this is such a massive drawdown strategy, because it's not the best for you. It's not optimal. Well, it's not optimal, but it's not ideal to have. I couldn't handle it, for example. I wouldn't like to have a strategy that has like 10 losers in a row quite regularly. It'll piss me off, and it will really make you question things. It makes you playing it on hard mode. I'd rather have like a 50-50 strategy or almost like a 80-20 strategy, but I only really make a tiny bit on each one. Risk-reward ratio.
Yeah. Well, this is what I am trying to. I'm not just switching it all up. I am trying to base it on everything I've learned recently. The fear is that I'm overcomplicating it, so I'm trying to keep it logical. This is why I like to ask the whys. Like, there's some reason behind why that might be the case, and to like to base it on what I've observed and tracked over time. So in a sense, now I will take profits on certain trades in certain environments. But if I have reason to believe that it's going to be a runner, then obviously I want to expose myself to the fat tail. I'm trying to find ways to. This was the whole point of like all the different elements I've been adding, trying to find ways to reduce the drawdown. And I think I've got some ways, like the okay, basically different levels and different ways of looking at levels. And obviously, and also recently, the time element is definitely a factor. Like if the trade isn't working out within a certain amount of hours, it's probably not going to work out. The trades that work out actually don't have drawdowns, basically, because that's why I use market orders. I get slipped, I pay commission, but for the one out of 30 trades that's a runner, it literally like I get slipped, but there's no drawdown. The drawdown was the fee and the slippage and the commission, and that's it. It just runs. That's why I need to catch it with a stop order. So, and obviously, if that happens, then it's literally in profit instantly, or the drawdown lasts less than an hour. So that could be another element I add in. Like if the trade isn't in profit within an hour, close. And I can significantly reduce my losses. So I know maybe it sounds amateur to be like, oh, well, you can't avoid losses, but I want to reduce the size of my losses, consistency of my losses. And so that, because that's what I've noticed so far. Yeah, I'm trying to be positive. I've spent a lot of time on trading and my knowledge has expanded and I've caught some big trades. So obviously, yeah, maybe luck involved, but I believe there's some skill to it. But my C game, the concepts of my A game is when I'm setting orders and position sizing is correct and I execute and I'm not swayed by losses. And my C game is when I'm emotional and I'm making stupid trades. So my A game has got better and better and better and better. I've made massive progress even in the last year or two. But my C game is still shit. Like I still get emotional, still, do stupid shit like move a stop or blah blah blah. Yeah. If I can eliminate that, then I think I'll actually make some real progress finally.
Where do you because I'll just preface this with like when you enter a prop firm and then maybe they teach you a setup, a basic setup, and there's like as we discussed previously, setups are 10 to the dozen, and there's lots of them available and there's lots of different ways to skin a cat. How attached are you to your particular setup and the way you trade? And would you consider maybe not completely abandoning it, but adding some breadth to your trading and just experimenting on something not completely different, but maybe a bit different?
Well, I am kind of, but I feel like it's an amateurish move to completely change things. And I've also spent time on this. I feel like I've got some element of an edge because I've got the knowledge, experience, the data, so what I'm trying to do is add something on top of it, or like add another element to it where I can, maybe start taking profits at certain levels and so on. I don't want to like change market, start day trading or scalping in treasury futures, something completely different because it's starting from scratch. Yeah. I lose all that time.
Well, I don't know if it's starting from scratch because you've still got all the transferable skills, like you understand all the psychology and everything and all the processes. It's just literally the one thing you're changing, the setup that you're looking for. And I don't know, I asked the question because it's got me thinking, just again, listening to Chat with Traders podcasts and hearing about all these different ways that people trade, and some really simple stuff, some really complicated stuff, using a variety of different tools and approaches. Yeah, and also I've been exposed to a lot of different kind of indicators and tools and seen people using them in creative ways. And I've got that itch where I want to start adding breadth to my trading. Because like I say, maybe some days I don't get a good setup. So adding breadth, helps you constantly have something to do. And it could, in a way, if you look at it like that, the devil makes work for idle thumbs. If you've constantly got a range of an arsenal of weaponry to choose from, stops you doing stupid shit when there's nothing to do. I mean, that's one way of looking at it. But
I still think you can go too far. You can overcomplicate it, just like in every other case, journaling or trading strategy indicators. In my opinion, I'm trying to do the same kind of. Maybe it makes sense to keep yourself occupied, like focusing on your account. I still think you should drill it down to like 2 or 3 core strategies. Like I was trying to do it with, like, I've got my core Bitcoin investment, exposure to the Bitcoin exchange rate, plus I've got my swing trading strategy. Or I wanted to do something like, when I'm looking at volatility, I'm thinking it's mean reverting, so it's either gonna, like, because the volatility is coming, so it's going to explode. So I'm looking for trends, or it's mean reverting, it's coming down, so I want to fade moves. Like, just having 2 core strategies like that would make more sense, rather than having like a day trading strategy, a scalping strategy, a range, because then you've just got too many things.
Well, I don't, like you say, it gets complicated, but I don't think it necessarily gets complicated. It just gets wider. They could have 10 strategies, but one is just buy when it passes the moving average. It's a very simple strategy, but it's just an option. It gives you options.
How as one person that maybe is even struggling to define and execute one strategy, if you start adding others, you're going to start having to, oh shit, I'm long on the moving average, but I want to get short. It's going to get. You're not a hedge fund, If you had a team, that would make sense.
It's a valid point.
That's why I'm saying it should be connected, in my opinion. Right. So you have, like, you have your swing trade account and you have your day trade account. They can counteract and they can even balance each other out. It shouldn't have, I think, completely different strategies. Completely, unconnected.
No, it's absolutely a good point, and this is the process that again, SMB Capital guy said, Mike Bellafiore, when he's training new prop traders, they go through a process, and it starts off with consistency, then breadth. No, consistency, sizing, breadth. And maybe we're not even at consistency yet. If you can get consistently profitable on one strategy, then you add size to that strategy, and then you look at other strategies and fill it out horizontally. But you've got to. But I don't know. I don't know. I feel like I've got the strategy, and now I'm working on sizing. And then but I'm also got one eye on, wow, there's all this other shit I could look at as well. But I'm not yet, because I've got to get this done first. But that's why I'm asking you. Like, I almost want to. You don't, I know, and like, I don't want to learn your strategy. You don't want to learn my strategy. But I want to really teach you my strategy, because I think you could execute it better than I could. I really do, because I'm a pussy when it comes to execution. But I think you could execute better if I tell you exactly what it is and what you have to do. And there's rules. I can give you A, B, C rules. I think you could just, grow some balls and execute it. And there's rules for off when you go offside. There's rules for when you play onside, and it works. But I'm keep messing up the execution because I'm scared. And this isn't my own problem that I'm dealing with, but I'm slowly getting there. I'm slowly sizing up, and I'm focusing that. Like I sent you that thing on Phil Ivey. He likes the feeling of losing so much money that he can't even breathe. And I've had a bit of that in poker, but I've got to get used to that. I've got to embrace that feeling, because then I won't be scared of losing, because that's what's fucking me up, and that's what I'm struggling with. It's all execution.
I'm scared because that is a feeling not only that I've experienced, but I've even fantasized about. That's why I thought it was a joke, because I see it as something toxic. I remember I had that fantasy, and that's one of the reasons I wrote this story about these crazy traders, is they were like, that are doing cocaine, and it's partly to have experience with creative writing, but also to, like, I thought maybe I'd release the extreme parts of my character. And I actually started with, if I make like a bad trade and I just totally miss I'm gonna close the account and focus my mind on this crazy story. So I'm like releasing all that energy. It's just, you know what? I thought about this as well recently. Like you said, most people are human, so they're not made for trading. That's the whole point. The successful traders are people that find tricks
Yeah.
or hacks of how to manage themselves, right? Which is kind of beautiful in a way because it's teaching you about life in general.
Yeah.
But I thought recently it was a pure shower thought about Nav, like you know how weird it was that he used to if he if he lost like 10K in a trade, he would take his 60 quid tracksuit back to JD Sports because he didn't deserve it, even though it makes no financial sense, you know, like he was worth millions anyway. But it actually, and then I thought about it, maybe it wasn't weird, maybe it was fucking genius, a perfect way to manage your money. Okay, you made a bad trade, maybe you didn't follow his rules, so I don't deserve this tracksuit, I'm taking it back. This is part of the, like right now, I'm not spending money, partly because that's why I don't want to buy a microphone.
Well, you can't afford a shirt.
I can't afford a shirt, can't afford a microphone. And it's partly like, I realized it's partly like punishment. Like when I came here to Belize, it was like I'd made that big trade, I'd quit my job, I'm partying, I'm living it up. Now I'm like, okay, you know what? I haven't made it. I fucked up. Get my head down. I've stopped drinking for like 3 weeks. I'm not going out. I'm like back testing, journaling, looking at things, thinking. So maybe it is a good sign. Maybe these fuck ups are the best thing that could have ever happened to me because now I get to work properly, you know. So I don't know what my point is, but
about punishing yourself or not, your shower thought was yeah, it might be a thing, but I wouldn't try to understand what he was thinking because he's autistic and he's got a different way of thinking completely. And this is a egotistical fallacy when you assume other people think the way you think. You get it at poker a lot as well. Like, he can't have done that because I would have never done that with queens. And then you make a mistake because everyone thinks differently and everyone has different reasons for doing things. So don't try to understand unless you go and ask him and maybe he would tell you, but it still might be a thing. Yeah, I mean, it still might be a way to punish you, to psychologically get your head in the right space. I've listened to Mark Douglas, and something he said was, because again, my fear or my biggest problem is the sizing and the fear of losing money. Just the fear, and I think I'm a category of trader, and after listening to a lot of these podcasts, there's like crazy gamblers, maybe like you, like Jesse Livermore, like Nav, whatever. There's also, I'm a category where you just go years and years and years, and you never size up because you never lose a lot, but you never win a lot either because you never. And it's different other extremes of but they're all human psychological problems, and it's irrelevant of how good or bad my strategy is, and it's irrelevant of how good or bad your strategy is. It's just everyone's different, and the like I say, the thing I'm dealing with is treating it like I love. That's why I like this saying about, hey, losing so much money that you can't breathe. And Mark Douglas says, treat it like a slot machine. When you spin the reels on the slot machine, you don't panic or anything, do you? Just treat it like that. That's what you. And just listening to this, it's almost like meditation. It gets me in the mood to just, okay, I'm sizing up on this. I've got no reason not to. I'm playing like a slot machine. I'm just gambling now. Let's go. And it really helps. And I feel like I'm slowly making progress. I don't know if I'll have this problem forever, even when if I become a really good profitable trader, I might still have this kind of gremlin inside me. Or if I can just get it out by just working my way through, meditating almost. And again, the other thing I heard was that a guy from SMB Capital, he was actually teaching a guy who had my issue, and he went up to him and ripped up $100 note in his face. I don't know if you saw that video where he was talking about that. It's like, it's just money. It's just nothing. It's worthless. Just gamble it. It doesn't matter. Like, what's $100? If you learn how to do this properly, $100 is like one tick, and your future earnings, this is nothing. And all this kind of stuff is resonating with me, and this is my biggest challenge. It's not my setup, it's not my journaling, it's this. So yeah, we've got different problems. So that's why I'm saying, if I
Yeah,
teach you my setup and I can teach you, show you all the data, you would just be able to trade it with balls and say, okay, this is what, but you'd need to trust it. You need to practice with it, I guess. But that's why I'm saying,
yeah,
why stick to something if it's, I mean, I could, like, I know you haven't been doing it solidly for 15 years. You've been on and off, but I don't know if you've been doing this particular strategy for that long either. You've probably gone round the.
well, that's the thing. Yeah, what everything you said was pretty interesting as well. But about my strategy, on the positive side, it has evolved. And it's not just been randomly. Well, there are cases where I've changed things drastically, you know, because I'm still an amateur in many ways, but it has evolved. The core idea has evolved, and I'm quite proud of it. Like, even in the last few years, that's why I feel like I can't quit, because I've made progress. I can't just be like, oh, fuck it, I've made, like, this is the closest I've ever been, and then I'm just like, no. Also, I'm like a little bit addicted, in the sense that, yeah, I say like I'm sick of trading and stuff, but I still love it, and of course I want to make it work. It's just exhausting. Like, doing anything well is really tiring, and obviously I think the longer you do it, the harder it becomes, because like it's a lot of time, and it's you call it, what do you call it, cost opportunity or whatever.
Opportunity cost.
Yeah, and also there's like the sunken cost fallacy, where it's like, okay, the longer I've been doing this,
Yeah.
and I have to make it work, and
Well, yeah,
maybe
exactly.
not. If I'm not skilled at it, then maybe I've literally just been wasting time, and the more time I waste, the less time I have to get better at something else. That's how I've been feeling. Like, because I believe in myself in general. I think I can write well. I've been trying different things, you know. I tried stand up, I've been writing for work, I've been playing music, I can do other things, but it's always in the back, and something in my head, it's the gambler's mentality thing. I can't just do things that, when I do something, I have to do it. I have to be like, this is me, I'm this now. So for a long time, in the last few years, it's been, I'm trading, I'm doing it. But if I ever want to get better at writing, and like when I wrote all those little pieces, at that time I like stopped trading. I was just, for like 6 months, I'm like, I'm a writer now, I'm writing. So if I do something, in a sense, it would be like I quit trading and I do something else. It's just the way I
Yeah,
work.
yeah. That's different. Again, different personality types or different ways we work. Like I can, to a certain extent, I can have two or three things on the go at the same time, and I like that. I prefer it. And if one thing's pissing me off, I go and do the other thing. Yeah.
Yeah, well, I saw, I don't know if it was a meme or it's actually a life hack. It said you should always have two projects going at any time, so that you can procrastinate on one by doing the other one.
Mm.
And maybe it was a joke, but it actually kind of makes sense. I've noticed that if I procrastinate on something, but I still have the mental energy to do something else,
Yeah.
like productive, I actually do more of that other thing, because I'm
Yeah. Yeah.
procrastinating on the first
Well,
thing.
the example is trading as well. Like waiting for a trade. Obviously, I'm only ever executing 5% of the time, if that. A lot of it's
Mhm.
waiting around and just editing these videos or editing other
Mm.
videos that I could just go and bash one out. A video, I mean, in like half an hour. And
Well,
well, and
I bashed them out too, but two videos. That's
yeah, and it doesn't take you half an hour.
no, definitely not.
Yeah. But the other thing I was going to say, like going back to your journaling, and you're saying it's kind of getting a bit of a muddle, and it's getting overcomplicated, but you keep changing the way you journal. You've also got to be careful or aware of was it cognitive? I've forgotten what it's called. Basically, selective memory.
Yeah,
Um,
yeah.
like you, you've talked about your setup and how it's sometimes. sometimes that's the word. Sometimes you don't even get any drawdown; it just goes, and that's great and it's beautiful and I imagine very satisfying. Obviously, it's not always like that, but sometimes and always, what is that number? Is it 100 to 1? Because if it is, then maybe there's better ways to do it. And don't keep remembering the time that it was so beautiful and perfect, because that might skew your. It's also almost like the opposite to me again. Like me, I remember all the bad times. I just think this is not going to fucking work again. This setup, oh, this is not going to work. It's not going to work. I didn't do it last time. It didn't, and it just works really well most of the time. Like 70-80% of the time, it works. But I'm just thinking it's not going to work. You seem to be doing maybe the opposite. You're thinking if it works, though, it fucking works, and it's amazing. It's incredible. You're being optimistic in that. I'm being defensive. You're being aggressive, and just try and get some numbers on it. And this is where just any way you can track. That's what journaling should be. Just try and measure that in some way. Like how many times do you actually get no drawdown? Is it just once in 100? Because that could be just random, and it's not that good. Don't fantasize over that moment.
But that's my point about like fat tails are once in 100 by definition. So I don't know, is that capturing the essence of a fat tail, or
you're a gambler? you like this fat tail. He's hit it out the park. That's what drives you. That's what excites you, right? This could be
definitely, it. Definitely, but not in the sense that like I'm like flipping coin. This could be it. It's still look. Also, this is why the story I was writing as well was about a heist. I like the idea of like planning, waiting, and you have like one job. Like in the heist films, it's always like we just have this one big job and we get the millions and then we're done. Like I like that feeling of, I don't want to like grind it out. I want to like work, plan, wait, and then like strike and then hit it out the park. That excites me. More.
I'm the opposite. Like going back to poker as well. I used to have a friend that played. Used to buy poker tournaments where there's almost like 5,000 people entering one tournament, and maybe the top 200 get paid and it ladders up, and the top one gets $1 million or whatever. It's like World Series of Poker or whatever. Like massive poker event, massive poker tournament. He used to play those and he used to really be excited about those. It's like a lottery ticket for me. The variance is incredibly high on those. Chances that, you have to just not get unlucky hand after hand after hand after hand. And it's like flipping a coin ahead. It's by the time to win those things, it's really hard. And I prefer to do the opposite. I prefer to play 6 max cash games. So there's only 6 people on the one table, and it's more pure poker. And the variance is the variance, but it's not like every hand counts as the variance. Not every tournament counts as the variance. It's like it's a slow and steady incline rather than a flat or just going down, then a sudden massive win. And it sounds like you're like the multi-table tournament guy, and I'm the grinder on the cash table.
I don't know if I ever told you, but once I won it, I played poker semi-seriously. Like I was exploring it. It never worked out in the long term, but I did win a tournament with like 3,000 people. Or I don't remember the number, but more than a few hundred, less than a few thousand, let's say. And I remember, but it's not strictly true because I was with a friend, and he ended up. I was really poor at like heads up and stuff. So at the end, like on the final table, he took over. He was actually making all the plays, but I sat through it all for hours, and then he kind of closed out for me, which was good because by that point I was exhausted. But yeah, I definitely was attracted to that. Like all you have to do is win one of those tournaments every so weird, often, and
that doesn't appeal to me at all. It's gambling, I think.
Well, but why though? It's just a different form. It's gambling.
Just higher variance, super high variance.
Yeah. But it's just a different payoff structure. Assuming that you have some edge, it's just a different way of it's just a different payout structure,
It's different, but I don't. It's interesting why. And I remember I used to play the really low stakes, like 25-cent blind, 25-cent, 50-cent blind, or even 5-10-cent blinds. So I would only have $20 at the table in a cash game, and just play like 6 tables, 12 tables simultaneously, and just grind 50,000 hands a month. And my profit was pretty good. I made like maybe $1,000 a month, but consistently, because the variance was all evening out. And he would just have wild swings. Some months, well, 9 months of the year was like losing thousands. Then 1 month it would make 10K. It's just, I don't know. I think it's less skill involved, more luck involved.
But how is that? To win a tournament is incredibly skillful in a
It's
different
lucky.
way.
You need to be lucky. You need to be really lucky. Even if you
Well, no,
make
but that's
perfect decisions, the variance is too high or high. Like
yeah,
you
I
can
see
make
what you
you can
mean,
play really well, but just get sucked out, or you just go card dead, and you've just entered this tournament for.
Yeah. I see what you mean, but I don't see it necessarily as low. It's just higher variance. In a sense, it's the same as like trend following. The whole thing is you're looking for a trade that runs away, and that's very much based on luck, right? You get in, and some factors are in play, and then the trade just runs. So it is very much luck, but the point is you put yourself in position to expose yourself to that luck. So that's skill.
I'm trying to think of what it's like an analogy. Like, would you rather have 10K a year?
Started.
Yeah, I accidentally started. Would you rather have 10K a year for the rest of your life, or would you rather just me give you 200K right now? You would probably just want the money.
Well, right now, yeah, but
I don't know if that's the same though, because I would. There's no downside to it, is there? Like I would
no.
probably take the money as
But
well. To be
what
honest.
about if it was? What about if it was something else? We'd need to work through the numbers to make sure they make sense. But what, like randomly, what if it's something like, yeah, you can make 10K a year consistently every year, or you
Flip a
can have
coin.
an income where you make 1,000 a year, but you have a 10% chance of making 500,000 in
Yeah, no,
any
yeah.
single year.
No, yeah, no, yeah. I know what it is. Like 5,000 a year, guaranteed. Or you flip a coin, and you might win 10K, or you might lose, or you might get nothing. You might win 10K, or you might get nothing. Or it could be 20K, or you might lose 10K. So the expected value is 5K still. I can't work it out.
Yeah. Well, that's something from behavioral finance, and most people go for, I think most people go for the chance win but that's not really fair because in this theoretical world, it's like free money anyway. Like the money's coming from nowhere, so of course
Yeah, there's no
it's like
downside.
nothing to lose. If you lose, you lose nothing anyway, and if you win, maybe you win a lot. I think it's normal in that sense. In reality, it's very different. That's why I think there are some people that believe all these experiments are totally pointless. They may be interesting, but they have no say in the real world.
Well, yeah. I mean, whatever I'm just trying to think of a real life kind of analogy here, but whatever the thing is, I think
No,
it's
but you're the
interesting.
same. Hang on, this is a real life analogy. You said it last time we spoke. I don't want to, have a long-term career up the corporate ladder. Maybe I would have made more money, but I'd be less free. So you're taking gambles with business ideas and with trading, and you're basically making somewhat of a gamble, but you believe in your skills will pay off, right?
I think that's slightly different. I'm not sure why. Remember, I did say though, my whole ambition, or I would be content if I just made 5K a month trading. That's my mentality. I don't want to make have a chance of winning 1 million 1 month.
No, but you also
I,
said, I believe I have a chance of making more than 500K.
yeah,
I'd
yeah,
rather
yeah,
speak to
yeah.
Nav than get 500K, which
Yes.
is,
Well, yeah. I think the whole business thing is, and like being entrepreneurial and not liking a 9 to 5 where I've got a guaranteed regular income. That's more like I feel like I'm maybe I'm being arrogant in that. I feel like I'm wasting my effort. I honestly believe I have some talent or some skill or some ability in this life, and it's wasted if I just do a 9 to 5. It's a high risk thing because I'm probably just going to end up achieving nothing. But I want to do I want to
But
put myself to the test. I don't want to
but that's the gambler's mentality. But in the long term, in
just.
you've built your life around a
It's
big
more of a
gamble.
confident, ambitious thing rather than gambling.
Yeah, I know.
Because it is.
That's why I don't like that word. But you've been using that word, and I think that by your definition, it's the same thing. I wouldn't say that wanting to go for the home run is gambling. It depends on yours. If you're just like flipping a coin, and yeah, but if you're building something where you're capturing, let's say, fat tails, then
No,
you're
but that
doing the
is.
same thing. Yeah.
I think it's different. I don't know. Like capturing fat tails is a lot of like if you did like traded perfectly, perfect execution over the course of a whole year, and you really cut your losses, you stayed, you met the challenge head on, you had your mindset in the right place, and you by the end of the year you grind it up to 1 million. That's kind of the approach I want. I don't want to just to put on have a hunch, put on a bet, and it just skyrockets to 1 million. I just make it in one day. There's a big difference in those two things. I think one, I'm using discipline, consistency, skills over time. Another thing, anyone could just achieve. Anyone can just get lucky in one trade.
Yeah, but this is where I disagree because, as you know, as you've been discovering, and something I believe there's something there is position sizing is probably an edge in some way if you can position size. So yeah, obviously if you're just like, oh, today I'm going to do a big bet and it works out and you make 1 million, obviously that's gambling. But if you have some edge, some reasons, some statistical analysis, whatever it is, okay, now this is a trade that, okay, I did some numbers. I don't have them at hand, but it was in terms of like assuming, like working into a position. So every time price moves in your favor, it's like confirmation that you're right in terms of trend following. So you buy into a position, it goes up, and you add when you get a specific setup. But then if you start, every time you get confirmation, you see it as a confirmation that you're right. Instead of just adding, you actually pyramid in by taking those paper profits and
Right.
risking those paper profits.
Doubling it.
So, and if, yeah, whatever, like, there's different ways of doing it, but if you just do some basic random calculations like a 10-hour trade, and let's say after 3 hours you get another setup. If you just trade each setup, you make 10 hours. But if you add, like, you double your position size every time, all
Yeah.
the way to 10 hours, it's not 10 hours, it's like 50 hours, and it's an exponential. It's a
Yeah.
huge difference.
Yeah. It's kind of I hear what you're saying. It's kind of what Nav did. You said,
Yeah,
basically keep
yeah.
adding and adding, and you only have to hit one of those.
Yeah, and there's I believe, some scientific method behind it, because if price is your driver, then confirmation is, your paper profit in a sense is confirmation that you're right, the move is happening. And luckily, with trend following, momentum, fat tails, it's connected because the fat tail comes from a trend. So
Yeah.
if you're showing profit, then that's your confirmation.
Yeah. I mean, I've heard time and time again, one of the biggest cliches in trading is to do something or use your approach that suits your personality. So, and it's not wrong. Like, who am I to say it's wrong? It's not. It doesn't appeal to me, but for you, it might be your bag to just you could just have another year of not really winning anything, and then you can suddenly just win 10 million on one trade. And then who's laughing then? And you'll be like saying, "Sam, I told you." It's just a matter of time. Just have to keep. But I couldn't handle it. The psychological impact of that going, and it might never happen. Might never come. I'd rather just grind up steadily. But it's just different
Yeah,
personalities, I guess.
yeah, true. It's true. Although, I mean, once I heard somebody say that, what you said, like, what if the fat tail is that there is no fat tail? Or no, not the fat tail. Or what if, like, the black swan is that there is no black swan? But I think that's kind of bullshit. Like, it's coming. It's just, can you survive long enough?
Yeah.
Um,
But
that's why risk management is important, and also the psychological element.
yeah, there's certainly different ways to trade, and again, listening to these podcasts, a lot of people say just take the singles. Keep taking singles. Keep the money flowing. Keep it coming in. That's maybe the more conventional approach. I don't know than just every, because it's kind of like that thing you do on roulette. Like you put it on red or black. You put it on red. If you lose, you put twice as much on red. If you lose, you put, was it martingale or something, 4 times as much on red.
Yeah.
And chances like just 5 times you're not going to go black, 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 black. Well, it's not going to. It might, but the odds are very slim. Just keep doing that, and that's.
Well, yeah. So, but martingale, apparently it's guaranteed to work. It's just you're most likely going to run out of capital unless you have infinite capital. It's just it's an edge, but statistically, it's not an edge in reality because most people have limited capital. Which is my point, that it all comes down to, in my opinion, at some point, that the ultimate like icing on the cake, I think, is position sizing. And people say risk management, but risk management is to cut the downside. It's the upside you have to push.
Exactly.
With leverage and adding and stuff like that.
When I first heard about adding as a risk management tool, the way you just described, I was like, my mind was blown. I thought, wow, this makes so much sense because, of course, cut your losses, but also your winners you need to put your foot down on, and it makes up for all the losses. And I thought, wow, this is great. And then I've just been going through learning more and more and getting more experience points on how to add. You can't, and we went through this before, just adding randomly, you just fuck yourself up. You need to adding needs to be a trade in itself. So it's all coming together, I think, and it all makes sense.
What I'm trying to get at least for me, it's connected. If it's part of the same hypothesis, like it's not really a separate trade, it's a separate leg of the trade, but it's still connected. You can manage it separately if you want, but if it's going your way, it's confirmation that hypothesis trade setup overall is working. So you can double down and keep betting. And it's not dangerous. All you're doing is risking paper profit. That's the gambler's mentality, but risking the house money. But I think it makes sense. If you said like you're adding as you're going into drawdown, that's martingale, that's dangerous because eventually you run out of capital. But you're going the other way. You're saying every time I have free capital, I'm going to risk it.
Use it.
And guess what? Most of the time, probably end up giving it back. But you only have to get 1 or 2 of those in your career, and it just, that's it, pays off.
I mean, I don't know, man. I mean, I want to show you my strat because, and my trade reviews as well. It just works. And I've started adding it. It goes to my target. And I've just got I started adding a bit more. Like, I think the maximum I've ever won on a trade is like just over $200 one trade. I got one for about $100 the other day. But I feel when it's all working, and now I feel like just hammering it. Like, should I just add an extra 0? I've got enough capital. I could just start adding because I don't know, man. I'm starting to really believe I could just add a 0 on. But can I handle that?
Why don't you just like give me your fucking login details? Call me okay, it's trade, and I'll put in the numbers and execute the position, and you give me 10%.
Yeah, I guess try and do it myself, save 10%. But yeah.
All right, 5.
It works. I feel like I know it. I'm confident in it. It happened again when I was in a meeting the other day. I missed it, but it played out. And I've got a contingency plan if it doesn't work. I've got a way to trade it offside as well. I've got a really wide stop. I told you this before. It rarely hits my wide stop because it's almost like another trade in itself. And this is where in future I could even, shouldn't add to losers, but I could even salvage the position by, if it goes so far past my entry, just adding a little bit so I can get out when it comes back to my entry. But I've just not got the balls or experience to do that bit yet. Never mind. I'm not even, doing the main bit yet. If I could try small size, it's fucking easy, and I just do it every time flawlessly. I'm really getting there. I've just got to. It's all the pieces are coming together. Mindset. Now I'm kind of more chilled and more relaxed again. I think it's easier. I'm actually getting size back. But yeah.
No, but it is a massive deal because I've cut back a lot, and it's easy now. It's just only because it's maybe that's what you need actually to do that feel lively thing. Really size up, maybe really feel your knees shaking, and then cut back, but still higher than what you were doing before, and it will feel easy compared to
Yeah.
you know.
I think so. If I could handle bigger size, then it wouldn't feel as much, relatively speaking. And I'm getting to the point where like I'm almost getting there through just getting sick of this. Like I'm just kind of thinking, what the fuck are you just gonna keep winning $50 little $20, $50 on these trades when it plays out fucking perfectly every time? I'm so tired of this. That's becoming worse than the fear of losing money. You just hear me? I can't hear you.
Yeah, my mic just quit working for some reason, but I heard everything you said.
Yeah. So yeah, that's it. The fear, the frustration, and getting sick to the teeth of winning a little bit when I'm right is overcoming the fear of losing a lot now. So it's that what might tilt me over the edge, ironically, but not ironically, but just interestingly. Yeah.
Okay, so that's your trading plan. Just keep doing it until you get sick of it, and then
Sick, yeah. Like I sit here for 4 hours, 5 hours, and I make $40, and it all played perfectly. I'm thinking, why didn't I just add another zero? $400 would have been fine for 4 hours work. Um, just and it just the more it happens, the more sick I get of it. Yeah, but yeah, and this is why I mean, go back to the point I mentioned it earlier about just the fear of money and ripping up money. I should get like €50 and I just rip it up. It doesn't matter. Who gives a fuck?
yeah.
It's just play money.
Well, I don't know about that, but I think it was actually Trader Dante that said it when I saw him on the forums years ago. Somebody, could have been him, said that every time you have a losing trade, you should physically have the same amount in notes and put it in a bin next to you so you can see what it looks like. I don't really remember the point of the exercise, but it kind of sounds the same. You shouldn't burn it, but you should get it in physical notes and put it beside you to make it real, kind of thing.
Yeah, yeah. I think just it's a form of meditation. Just getting yourself in the right frame of mind. Just it manifests itself in different ways. So sometimes I just don't even take my setup through fear, like think hesitation. I've stopped doing that because I'm getting better at that. Another way is I don't quite enter where I should enter, so I wait for confirmation. Enter on the back side when I feel a bit safer, but you get a worse entry. Yeah, you do save yourself sometimes when it just goes straight through your level, but most of the time it just plays out and you get a worse entry. So it manifests itself in multiple ways. And now recently I'm entering here. I'm just jumping in, and it feels like knife catching because on the time frame I'm playing it, it's just smashing into the level. But on the higher time frame, that's the level I need to play. And more often than not, as soon as it hits it, the sellers come in and the buyers exhaust in it. And then I play it. That's when the real decisions take place. It's better. I think it's better to enter on the front side, get in, and then manage it from there. Not wait for confirmation. It's better just to commit, take the plunge, and with size.
Yeah. I used to play this. Well, okay, forget that. Scratch that. I like the saying, "You have to pay to play." Have you heard that before?
Sure. Yeah.
So if you want to play, fucking pay up.
Yeah. There was something that Trading Composure Twitter account that you've heard of that guy, that psychologist, trader psychologist guy. He said something like, if if you've never had a big loser, chances are you've never had a big winner either. Something like that, and that's a problem, or that's one category of problem. I can't remember exactly, but something like that. And I thought, yeah, that's me. Never had a big loser, never had a big winner. Yeah, I'm getting there.
So you're definitely self-confident, that's for sure.
Yeah, I am, and I I know there's a fine line between arrogance and confidence.
Mhm.
And I'm not confident.
And
I
I
can't.
don't give a fuck what that line is.
I can't fake confidence. It's. I don't think anyone can really fake confidence. They say like fake it till you make it, or whatever. But I can't do that. I can't fake confidence. I I am confident. We talked about this before. I keep saying that, but I think confidence is some kind of natural thing that you get when you've achieved something or when you believe something. That could be a belief. It could be something you've learned. It could be something you've accomplished. But you get it, and you exude it. And I think it's to attract to get women, right? Because it's like evolutionary purposes, like it makes sense because women want a good mate, so they can sense a good mate through his confidence because he must have achieved something. He just like if he's a monkey, he's just made a monkey hut or whatever, or wherever monkeys live, and he's just walking around and he's proud of himself. And now that hut is a good place to have monkey babies.
You know, Sam. I think you're a bit too confident there. Your theory of monkeys, you're definitely not an anthropologist, let's put it that. Not fucking whatever, even I don't know what I'm talking
Yeah.
about.
But I think it makes sense. Like, and when you've got confidence, yeah, byproduct is you're apparently more attractive to the opposite sex. But I don't fake confidence. Though. I am confident. Like, this confidence is for a reason because I believe it. It's working. I'm getting there. So.
Well, I told you that story, right? Remember, like in end of 2021, I made a big trade, had a big profit. That was my best trade of my career at the time. And that weekend, I went out and went to a club, and literally, I was just fucking exuding confidence, like you said. It was a girl. We made eye contact. I smiled. She waved. I walked over, and then we
Yeah.
went home. Right. I'm like, okay, that's a bit crazy because that just means which I don't know if that's a good thing or not, though. Because what is that? It's like
She found a good mate. She knew like subliminally that you were exuding confidence, so you must have achieved something. So you're going to be a good father for her babies. That's what was going on there. That was it.
but yeah, but I mean, talking about faking it, some people are just confident in that sense. Like it's nothing to do. Maybe they've never achieved anything. They just have a huge ego, or maybe they have a huge dick and they have no money, no prospects. They won't be a good father, but they walk around like I've achieved it, and they get all
Well,
the
I think
chicks.
it's this. This is where arrogance comes in. I think it's how genuine you are about your confidence. Like, and how you with great power comes great responsibility as well. Like if you're confident, you could just be a dick and you could rip into people, or you could take the piss and that's not very attractive. But I think also it depends on IQ as well. I think if you're an ignorant and like you're further down the Dunning-Kruger curve, like you're just getting lucky, but you think you're the dog's bollocks. I think there's a difference there because you're kind of stupid and confident. I think if you're genuinely confident and you genuinely are maybe this is what I am now, by the way. I'm stupidly confident. But if you're genuinely mastered something, you just have to. You don't even have to say it. You just walk around. You just feel it, don't you? You don't just you feel like you want to smile. You don't just walk around with your head up, your chest out. You just feel it, and you don't even have to say anything or just exude it. And but can you can fake that? I don't know if you can. I wouldn't feel like faking it if I wasn't confident. I wouldn't want to.
But have you not seen that TED talk? It's really famous about how like it was some advice before you go in for a job interview or something, like do a power pose for 10 minutes. And that literally increases your testosterone or whatever so it actually has an impact. So you faking it, you're just standing like, I'm the boss, I'm the boss, I'm the best. And then it actually has an impact. So it's a feedback loop.
Okay.
Like,
I guess I don't need to do that. Like, no, I mean, I don't mean it like that. I mean, no, I mean, I've never been in a position. Of course, I've been low in confidence many times in my life, but I've never. What's the point in that? It's if you're doing a business presentation, or if you're going to go chat up a girl, maybe. I've got a girlfriend and I don't do business presentations. Why do you need to fake confidence? Like, if I was feeling really low on confidence, of course it happens. Might happen this week, might happen next week, whatever. If I lose a trade, why would I fake it? I don't see the point. Do you know what I mean? What's our reason to do that? Maybe if you're going out on the pull, but you go in the gents of the bar. Like, yeah, I'm the man. I'm gonna get this chick. She's mine. It's just a bit sad.
No, but no, it is okay. Yeah, that example. Yeah, but I do think there's something there because what I'm trying to ask is it is it the environment or is it an internal thing? Because like if you're having, for example, in that case, I had a successful trade. I felt good. So I went out, I just felt good. But there have been other times where I've been telling myself like the visualization stuff, which is a lot of bullshit, but I'm like, I'm going to have a good night tonight. I can feel it. And then I'm like telling myself and I have a good night because, so what came first? Was it the environment or was it like my belief mindset? Because if it's the mindset, that's very powerful. That means you can change the way you feel and the outcome of
maybe it could help with trade. Maybe it could help with trading. I don't know. Can confidence alone help you trade better? I would have thought it could make you trade worse. In fact.
Well, yeah, that's true. That's true. But I like that line in the book. Something I kept telling myself before, and then I had the big winning trade. I don't know if there's a connection, but it was like you have to feel like you deserve the money. Like if you're a good trader, you've done well, you deserve it. Because a lot of people have some psychological issues, me included. Like, oh my God, that's a lot of money. Well, I did nothing. That doesn't make sense, and then it plays into it.
I feel like I fucking deserve it. I do.
Okay.
If you make it through trading, you deserve it by default. Trading is one of the hardest things to do in the world, if not, the hardest thing, going against your genetics almost, your things that are ingrained in you. It's up there with professional athletes and sports shit, sports psychology.
But I mean, the thing is, with being a retail trader, there's a lot working against you, like the lack of capitalization. Because, I mean, you need a lot of capital to make a living income, and if you don't, you're going to trade poorly. But in most cases, most people don't. Or if you do, maybe you're taking a big risk because it's like some of your life savings or whatever. So the institutional traders, prop traders getting backed, they have some advantage, a huge advantage, I think, because they don't have all those pressures.
Yeah, I mean, yeah, and one of the biggest advantages is being surrounded as well, having a support network, having stuff that we've had to learn ourselves over years. They've just been told, and they've got mentors. I think that's a powerful thing. So this is like a two-part question. First part is easy. So how long have you been trading for?
Is that a question?
Yeah. That's a question. You have to edit that now to make it into a short. Can't you just answer me? Okay, I'm going to ask you again and just answer it this time, God damn it. So I can't even answer it. So how long have you been trading? How long have you been trading for?
Nearly 15 years.
Okay. So if you could go back 15 years to when you first started trading and tell yourself something, what would you say?
Don't do it. Get a real job. No, probably be less impulsive. But that's very specific to me. Be less impulsive. Take a breather. Add a barrier before you take a trade. Add something that makes it harder to press the button.
Yeah.
I don't know. Like even right now, I'm trying to fill out a spreadsheet before I make the trade. Like I've got all the details of the trade. I've got my stop loss. Fill that out before you press the fucking button. Because as soon as you press that button, at least for me, it's too easy to press another button and lose control.
Yeah, it's a really good point actually, and I often have that. Like sometimes in the morning, I sit down and I just start looking at the chart and I see, oh wow, there's a trade there. I can see it straight away. You jump in, and then you didn't even do all your process or your checklist, and then like 10 minutes later, after you've properly analyzed everything, you think, shit, why did I actually do that? And rarely has it actually worked out when I've just dived in like that. Rarely.
Yeah.
And the market's always going to be there. You've just got to go through it. It takes 5 minutes just to go through all this process first. You've got to do it. Otherwise, yeah.
I'm really working on that right now because every time I pull up the chart, I'm seeing something, but it's impossible. That's what the setups are there for, is to say this is when you trade. And I'm doing something where I like literally walk away and come back. You know, like the whole idea of like when you're going to make a big impulsive purchase, wait 2 weeks. If you still want the thing after 2 weeks, then buy it.
Yeah,
so it's kind of like that. You see the trade, fill in the spreadsheet, walk away, and then go for a walk, go to the gym, like you said, do something, come back. If it still makes sense, you want then set the orders. And
patience is so important. What's your current biggest hurdle in trading that's holding you back the most and stopping you from progressing? And what are you doing about it?
Yeah, same thing. Impulsive trades, not trading the actual setup. And I'm trying to add a barrier to entry, better journaling. Also, I hate journaling. So I realize I'm trying to tell myself, if I make a trade that isn't the trade I'm supposed to make, I have to fucking put that in the journal, spend time analyzing that. I could just save myself a lot of time by not making that trade.
Yeah.
It's kind of
this is where you're adding, this is what we talked about, adding kind of randomness into your journaling. Then you've got random results, and everything's just random and you can't draw any conclusions from it. So, yeah. What steps do you take to suppress your emotions when you're trading?
It's a good question. I was going to joke and say whiskey, but that's probably not the right answer, is it?
Not a very good joke either.
No, because it's not funny.
Well, it's all right. I'll give it a 5 out of 10.
It's a good question. Well, definitely breathing techniques. I've been exploring breath a lot because I was sick for a time, and it really helps breathing. Trying to think about my posture. Try to be conscious. Like if I'm hunched over the keyboard, like breathing, looking at the chart, it's probably not a good trade, right? So yeah, trying to be more conscious, I guess. I don't know if that's actually something I'm actively. It's not like well, it is a technique, right? I'm doing something about it. I don't know what to add to that to make it better, but it's the first step towards something. Being conscious of my breath, taking a breather, taking a step back,
mindful,
and again walking away from the screen. Which is obviously might not work for other people. For me, it does because it's swing trading, and I know I have to tell myself this. I know it's true, but I keep telling myself the trade doesn't set up in a few minutes, an hour. This trade isn't going to be the one that I can even wait a few days. Even if I miss this entry, it's probably gonna be another entry. Maybe I get a worse price, but if it's a swing trade, it's playing out over months, not minutes. So I can go for a walk. Yeah, I can wait. I can afford to wait.
Yeah, and I've got slightly different techniques because I'm more of a day trader, but it's along the same lines of basically being mindful of your emotions, and narrating helps, and literally just speaking out, like you said, you talked about breathing, but also just narrating, talking to yourself. You sound a bit crazy, and having a definition for invalidation, and just until it's invalidated, you're good, kind of. Yeah, I mean, I wrote loads of. I wrote these maybe a day or two ago. I can't remember what I wrote. Do as much as possible before you enter the position. While you're flat, you think clearest. Flat is the best place to be. So yeah, preparation and planning. So that takes off some of the load when you're in the position, when you're in battle.
Honestly, I've been exploring some ideas of. I have one element of my strategy automated with the stops, like when the position is entered, stop loss gets sent to the exchange. But I'm thinking, like, is there a way I can also automate my entry, so just to make it harder to because I can't just open up the screen and press buy with a market order or whatever. It's an order predefined, but then also I have to fill in a load of code, before I make the trade, just to add an extra barrier.
I'll do a capture or something. Click on all the bicycles.
Yeah, yeah. Prove that you're a human and you want to make this trade.
Yeah.
I'm not sure how to do that. Maybe you've got some ideas. What would be a kind of a rational way of adding a barrier?
some time delay.
Yeah.
Literally sit on hands. I mean, it's.
But you say that, but it's impossible. I don't literally sit on my hands, and even if I do, I'm like, okay, I can do that for 10 minutes, and I'm like, okay, this is uncomfortable. I need a process where it's like, and I actually want it to be button pressing, because it's button pressing that makes the problem in the first place. So I want it to be like, okay, I want to press a button, so now I have this button to press, which sets up my order or something, like. So where I'm actually doing something, it's keeping me occupied. I can't just be like, yeah, breathe and put your hands under your hips. It's not going to work, because I'm going to eventually start pressing buttons. I just want to make sure the buttons I press are the right ones, not the buy market order 100x leverage.
Yeah, I don't know. I mean, if you get some custom software developed, or if you use a terminal, they might have some functionality in it, but you just have to. It has to be self-disciplined, doesn't it? You have to do some kind of procedure, start a timer or something. I don't know.
Do you still do that thing where you have an alarm every hour, you check your mindset?
Yeah, if I'm in a session where all I'm doing is just looking at charts, then yeah, I do. I think it's between 30 minutes and 1.5 hours, random interval, it goes off, it just rings.
Yeah, that's good. That's very smart. I'm reading that right now in this book about willpower. That you need to constantly remind yourself and check in on yourself. It's basically bringing your conscious awareness back,
Yeah, your slow thinking. Yeah.
But also something you said about gym and stuff. Maybe there's something there. But in the book, it's saying you can't have more than one thing. If your thing is trading, like I'm going to become a more disciplined trader, according to this book, you have a limited willpower. It's like a muscle. You can't then say, and I'm going to go to the gym, get a six pack, and I'm not going to drink, and I'm only going to eat healthy, because it's just too many things. You get overwhelmed and you crash. But maybe if you're using it as a hack, the way you say, like,
yeah,
it's
exactly.
the core goal is trading, and then if I have a bad trade or something, I walk away, I have a workout, and that helps me with the trading.
Yeah.
That kind of makes sense.
Exactly. The gym isn't. I don't have goals in the gym. It's a tool I use to de-stress. That's what it is, and it's all centered around trading. Trading is my number one thing. I have a part-time job to not worry too much about trading. I go to the gym to de-stress when I have a bad trade. It's all
Girlfriends
to get better at to increase my stamina in the trading. So something I do have. Have you seen the? I kind of, it stops me. You could get one of these or just a stress ball or something. This isn't for stress though. This is to keep myself busy if I'm. So if I don't do anything stupid.
Grip strength as well. It's actually
useful
exactly. For the gym.
Yeah, exactly. It's my friend who plays badminton. He left it here, and it's cool. Gives you good forearms apparently.
Well, I have been experimenting. I've been learning to do like a finger rolling with a coin, because I'm thinking like just fidgeting, it's a bad thing, but if you use it as a tool to like keep your mind occupied, or keep yourself away from doing something worse, it makes some sense.
This has two things. It not only stops me, it helps me wait and be patient while I'm waiting for my entry, stops me getting in early. But also, I find if I'm feeling a bit tired, normally if I'm too tired, I just stop trading. But if I just do like a lot of 100 reps of this, it wakes me up. I can think of other things you could do as well, but that's probably not a good idea. That's more of a distraction, another wrist activity. But this wrist activity is probably more productive. So yeah, give that a go.
If it sees you from behind, they might not be quite sure. This guy's wanking shots. A good trader.
Yeah. Something else. I'm not sure if I discussed this with you before, but it's related to something you said previously about kind of using fear as a signal, or using. I don't know if we discussed it, or it might have been the week where we missed our chat. But I heard this guy on Chat with Traders. He talked about kind of find that if we're fearful, there's different reasons for that fear. It's not always the same thing. Sometimes there's like if I'm scared, so it's important therefore to identify the source of the fear. Like if I'm scared just because I've sized up, there's nothing else to be fearful there. I've just sized up. That's good fear. So that's fear number. That's good fear. If it's fearful because it's broken structure, it's going against me, I'm offside, and the buyers are still in this market, that's bad fear. That's time to rethink. So, but to you, it feels the same on the face of it. It just feels like, oh shit, I'm scared. And it's really important to break down. Fear is the umbrella term, but break it down. And I think your point was using fear almost as a signal, but if in the case of where it's invalidating your current setup, or it's just not working and you're getting fearful about it, then it might be time to flip or change your outlook. But if it's fear just because you're sized up, doesn't tell you anything, just ignore that. Just being a pussy.
Yeah, I like that. It makes a lot of sense. Because it's very actually naive to say like, don't be fearful, or fear is bad, fear is good. It's obviously it's nuanced. How to structure that and what terms to use is a different question.
Yeah, I mean it's basically data-driven fear or emotionally driven fear. I think it comes down to that. Like emotionally driven is because I've sized up and I'm scared of losing money. That's it. That's all it is there. I'm scared of losing money. But data-driven is it's invalidated.
But there's something in that too, because and again, it was in the book about Nav. He was saying you should trade one lots all the time. Well, again, paraphrasing, but you should be getting in and out of trades. And then when you feel the fear of being offside, and you can make assumptions that the rest of the market is also offside, then you take the opposite side with 10 lots. So that's purely emotional.
Right. Yeah.
But it is kind of data driven, because then you're extrapolating, making assumption, and maybe you have other ways of looking at it, and you say, okay, so now maybe a portion of the market is fearful and trapped, and I'm going to take this trade, and then the technicality of it.
I've had that, but I've never acted on it, and my plan at that point is just to get out of this trade when it comes back to my entry. But I should be using that fear to just flip my position.
Well, that's something I've noticed in some of my back testing, is that some of the big trades are when not only I feel fear, but the market feels fear. This is why it's hard for me with drawdowns, because usually the deeper I get into a drawdown, the closer I am to that big gain. But also, like, if the market just looks like it should be breaking out and it just keeps trying, it doesn't. And obviously, I'm feeling what the market's feeling. I'm an extension of the market. If I'm buying, a lot of people are buying, and it's not working. You see it turning a little bit earlier than other people. Then it's actually a great setup in itself.
Yeah. Shall we call it? We've been Only 2 hours.
Yeah.
Probably have about an hour there. So,
Yeah, I actually got a lot out of some parts, especially about journaling, and about what you said about being, nobody's made for it. That's the whole point of the
yeah,
game. It's just about managing, your
yeah,
shittiness.
it's like we're all alcoholics, recovering alcoholics, and we're all about to relapse at any minute when we just
Yeah.
revenge trade or do something stupid. We just gotta. We're all on a tightrope, and it could fall off any minute. But we're just handling it.
Well said.